Hey guys, Jeremy Schnaidt here from the Schnaidt Insurance Agency, and this is episode 3 of our podcast. Today I have Jay Lambrecht and Eric Martina from Lambrecht Realty, and today we're going to talk about the relationship between insurance, real estate, how that kind of morphs into a little bit with lending, but really overall just to educate you guys on the ins and outs of real estate and how to navigate that. For some people, it may seem like a very scary world when it comes to buying a house for the first time.
Yeah.
So, Jay, Eric, I appreciate you guys being here.
Thank you. Hey, thanks so much for having us. We really appreciate it.
Yeah, absolutely. So let's just get right into it. Tell us about your brokerage, how long ago you started it, and your just experience in real estate.
Sure. Yeah, we started about 15 years ago. We do a good mix of commercial and residential real estate throughout Metro Detroit to the west side of the state. We do things in Grand Rapids, Muskegon area, all the way up to up north, Petoskey area as well. So we really hit all areas of the mitten.
Yeah.
So
what would you say is the percentage of commercial and residential?
We're probably, I've got a few agents, one including myself, but we've got probably 3 or 4 agents that do a good amount of commercial. I would say we probably are 50-50, but then the rest of the brokerage, which we have about 17 agents right now, is mainly residential.
Got it. Okay.
But everybody kind of dabbles across the line a little bit.
Yeah,
So,
right on.
yeah.
And Eric, how long have you worked at Lambrecht Realty for?
So we're looking at a year and like 2 months now, I
Okay.
think. Yeah.
And how long have you been in real estate for?
For about a year.
For a year and 2 months. Okay. Very good. Nice. Right on. What brought you into real estate?
My wife and I, we have moved a lot. And so in doing all of the moving and always looking for our next house, instead of looking for our next house, felt like, why don't we help others look for their next house? Because it's a lot cheaper for me to not have to move so much.
Sure. Absolutely. Are you mostly a person or a residential? Do you do commercial as well, or?
Yeah, I do commercial as well. A lot more residential than commercial.
Okay. And Jay, where's your business at? Where are you guys located?
We are located in Grosse Pointe Farms on Mack Avenue, 18230 Mack Ave. And then we've got office out in Troy as well.
Okay. You guys been there for a while?
We've been in Grosse Pointe for the last 10 years, I would say.
Okay.
But, I grew up doing real estate downtown Detroit and commercial office.
Okay.
So background was commercial. My family owned office buildings down there,
Okay.
including like Book Tower and Cadillac Tower and some other
Nice.
properties down there.
So that's how you kind of got into this then?
Yeah, I
Grew
started in like real estate at the age of 16 in the commercial world, and then transitioned over. As after I bought my first house, I kind of started dealing with some realtors, and I said, gosh, I think that this could be done a little better.
Okay.
So
Fair,
I
yeah.
started up my brokerage, and we've been very happy with everything. We're a boutique. We're not trying to be super big, but I think we've really had a client-first mentality, and it really has worked out well for us. to
That's
make sure our
awesome.
clients' needs are
Small family feel.
Yeah, exactly.
Yeah. It hits home a lot more for people out there.
Yeah, and I think if you look at our roster, we do have 5 Lambrechts.
Okay.
So
Okay.
it's a really a good family feel.
Yeah. Okay. Okay. Right on. What's more fun? Do you enjoy doing residential more or commercial, or there's probably pros and cons of
There's
both,
pros
right?
and cons to both. They're both really enjoyable, and commercial deals take typically a lot longer to make happen. If it's a property acquisition that's commercial, could take upwards to a year.
Okay.
On some of those deals, and there's a lot of red tape to go through and attorneys back and forth. Where residential, it's a little bit faster of a turnover.
Yeah.
And you're really helping people, and I think that's the main thing, and
Yeah.
whether it be somebody that's buying their first home or somebody that's bought a few homes, everybody finding a good realtor is very, very important.
Yeah. Family that's growing up or expanding, a family that's expanding, and now they're moving out of a starter home into a home for their kids.
Right.
Nice. Right on. Well, let's just get right into it. So, part of what we do here is we really, we love helping, people and educate people on. There's a lot of, let's just face it, with the internet nowadays, there's so much information out there. It's really hard to discern what's factual, what's not. So if you're someone who's young, maybe just got out of college or whatever, and they're looking to buy their first house, it's a scary ordeal. what do they need to know going in? Or I should say, I guess, what could you tell them that could help ease them going into it where it's not such a big, scary thing?
I mean, your first house, no matter how you do it, it's probably always going to be a scary thing just because of the size of the transaction. You know, you buy a car, it's 30 grand. You buy a house, it's 100. That's a lot of money. But I'd say the first thing that I would recommend is just getting your finances in order, knowing like what is, you know, your affordability of like what kind of house you can afford. So that way you're not looking at something that you can't, and then all of a sudden now you're shocked, and, you know, kind of get that scare factor out of the way. So, you know, they know up front before they even meet with a realtor, for example, like, you know, they've got their ducks in a row.
So if you're looking to buy a house, the first thing you should do before you even locate a realtor would be to identify who you're trying to apply for a mortgage to get pre-approved, right?
Yeah.
And that doesn't cost anybody anything for pre-approval, correct?
Correct.
Okay. So you get pre-approved, you figure out if you can afford a home or if someone's going to give you money, right, for a house. And then the next steps is identifying a realtor. And this is where you guys come in. So what, you know, should be looking for you guys, right? But what do you look for in a realtor? How do you know someone has that experience? What are the signs that they should look for?
I feel like not only do you want somebody experienced, but I feel like you want somebody that's going to, like, you know, we're 2025, someone that's going to vibe with you. You know, like, someone could be a great agent for you, but wouldn't be a great agent for me. Because if I'm looking for my first house and I plan on getting a fixer-upper, if somebody who's a great agent but has never really been in that fixer-upper side of things, but another agent has like renovated houses and knows the ins and outs of like, oh, you want to do this to your kitchen, it'll cost this much because,
right,
you know, I've renovated a kitchen and it costs this much, you know. So picking your agent isn't just, oh, you've been an agent for 20 years, you're good. You know, you can interview your agent just like you'd interview for a job. So, you know,
looking for somebody that has experience with what you're actually trying to do, what your goal is. Yeah, that makes sense for sure.
And to add to that, I think it's also important that your realtor not only understands the market that they're in, but also has a good understanding of what good negotiating is. You need somebody who's going to not only negotiate on your side, but then also understand the ins and outs of the property in general. It will save you money on a home inspection if your realtor can walk through and kind of see things that you may run into problems with, whether it be foundation issues, electrical, plumbing, that are pretty latent defects or patent defects that are visible or not visible. If you can help root those out for your client, it definitely would be helpful.
Yeah, people don't, you know, when even like when it comes to insurance, people shop, you know, for the best rate, right, cheapest rate, usually what's on their mind. But people forget that you can have conversations with people and like you said, in like a job interview, and see who, you know, like you vibe with, that you can work with, and you're confident that's going to have your best interest at heart, rather than just shopping for a number. You should be shopping for an insurance agent, shopping for a realtor, shopping for a lender, all those things, not just shopping for a rate. I think that's a really good point. Absolutely. So you get approved, right? You get a pre-approval, and then you find your real estate agent, right? So then what do you do from there? Obviously, you guys figure out what that client wants, what they're looking into.
Yeah, so you I like to call it a wish list. Kind of like, you know, how many bedrooms, how many baths do you want? Even something like a corner lot, just kind of anything, just to get to know like what they're looking for, the area, all of that. We can put together a list of, you know, potential houses that, you know, they might like, what I think they might like based on what they told me. They can give me things that, you know, out of nowhere, like out of left field, hey, let's go check out this house. And that's totally fine. But once we know what you actually want, then that's when we can really start to help you, because if we don't know, we're just going in blind.
Right.
So
communication is incredibly important.
Yeah.
Just like in any other transaction.
Yep.
You can't help them. You're not a mind reader, right?
Yep.
Can't help them unless you have that dialogue and they ask you, and they tell you what they're looking for.
Especially for a new buyer, it's important that, you know, at the start of the search, I always say, let's go look at houses. I think it takes a few houses to go into start really understanding what you're really looking for as well.
Yeah.
So,
it's, I don't know, maybe what would you say, how long does it take the average person to, let's just say like in today's market, how long does it take someone, how many houses do you think it takes for them to see on average before they find the one that they like?
gosh, that really varies. I mean, I've had people walk into their first or second house and say, this is the one. And, you sometimes still hopefully go see a couple more after that. And then they really know that's the one. And I've shown people, 20 plus houses before. So it definitely varies. But, you want people to usually, you walk into a house, it feels right, it feels good. And most people know when they're in the right house.
Yeah.
So.
And do you think setting expectations is important, and it depending on the market you're in, letting them know like, hey, this might be difficult, being honest with them, or how does that work?
Yeah, I mean, especially like with what we went through in like 2021, like that time, if you listed your house, it sold in a day. It kind of didn't matter. So definitely letting people know that, especially it could be a house by house too. This one hit the market and it's priced so well that it's probably going to be sold this weekend.
Okay.
Whereas, this house probably is going to sit for a minute because it's priced high.
Yeah.
So not only is it the market, but it's also house by house at the same time.
So having those like sometimes tough conversations with a client who's, well, Joe got this for his house. That's what I want. And so you gotta, be like, hey, let's be realistic here. I appreciate the, shooting high, but it might make more sense to come down on it a little bit.
Yeah.
Yeah.
And I mean, as great as Zillow and all those things are, it kind of really doesn't help for, especially for like a first time buyer, because they see a number and they're like, well, Zillow said this. My Zestimate is this.
Yeah.
But that's not actually.
They're not running all the true reports and everything that goes along with that. So tell me about the relationship that a real estate agent would have with the lender that they've chosen. I mean, is there a lot of dialogue, and should there be a lot of dialogue between the two when helping that person find a home?
Yeah, there's definitely a decent amount of conversation that goes on, because we need to know, like, we get the pre-approval, like, we got to make sure, like, that they can actually afford the houses that we're showing them, because we don't want to waste anybody's time.
Mm-hmm.
So get that. And then afterwards, making sure that, because sometimes at the max of a pre-approval, you can go to a different city and your taxes might take you up. So now we're kind of in contact to like, is this still okay? Or, what kind of down payment do they need to put down? Like all of these types of things.
Yeah. Okay. That makes sense. What about for insurance agent? How often do you guys talk to insurance agents?
I talk to insurance agents more than most, probably because I played hockey with you. But a lot of times, most people, I would say, use like their insurance agent that they already have, like, because they have car insurance.
Mm-hmm.
So, everyone always wants to bundle.
Yep.
So I feel like that's kind of the most common thing. We can definitely tell people, hey, shop around for insurance too. Like, even if you just have car insurance now, but if you switch to AAA, you could save more by switching your cars and starting your house here.
Yeah.
So
I think it's important too, when you're having those conversations with the client, there can be a big, difference in home insurance rates depending on the zip code. Where you're at, like a house in Detroit is going to be way more expensive to insure than a house in Troy, or right here in Clinton Township. So it is important. We always tell our clients that we know when they're trying to buy a first home, it's like, well, let us know the cities that you're going in, even just the addresses that you're going to look at, so you have an idea of what that house is going to cost. Because a split level house could be different than just a ranch or or a straight up colonial. Whether the garage is attached, detached, so there are different factors of a house on a slab versus having a finished basement. So we always tell our clients, like, it doesn't take long to get a quick home insurance quote. If you're shopping for houses, just like if you were to shop for cars, give us 4 or 5 VIN numbers, let us plug it in and let you know what it is, so then you don't get sticker shock, or we're not trying to play these games with at the end to make the money work and jacking up deductibles super high so they can get, they can close and all that kind of stuff. So it is important for the insurance agent and the real estate agent and the lender and all them guys to kind of work together, because at the end of the day, it's it's all our client. We're all here for them, to make that process, which is a scary and can be complicated process, but you want to make it as smooth as possible.
Well, I think you really hit the nail on the head with having that line of communication, because you brought up an interesting thing. It's not just a budget of how much the house is that you can afford. It's a total budget. So you can afford X amount of dollars a month. So you're right. Taxes come into that. Different cities have different taxes, and so do your interest or your insurance. So, and not only your home insurance, but it can affect your car insurance.
It can affect your car insurance as well.
So,
different zip codes have different rates. Yep. So, you may move from one city to the other city, and we've had it both ways where someone moves and their car insurance jumps like $500 every 6 months, or they move and it goes down. It's like, hey, nice, your car insurance went down.
The worst thing you want is for somebody to make a move, be excited, and just find out that it's just a little much of a financial struggle for them, and not be able to go through with it all the way. Yeah,
no, absolutely. Tell us about common mistakes people make when they are looking to buy a house, whether it's, first-time buyer, more experienced buyer, stuff like that.
I'd say a common mistake could be something like you're going to find your dream home in the first day out, just because, they saw it on Zillow. That's probably the biggest thing is expectations. Is, a lot of people think that they're just going to like, oh, I saw this on Zillow, I love it, and we're going to buy this house today.
Yeah.
And then I'd say with, we're going to buy this house today, especially for a first-time home buyer, is kind of the length of the transaction and everything that's involved. Because, once you make that offer, you don't just buy the house tomorrow.
Right. Yeah. So on that, actually, real quick, what would you say the average length for someone to get a pre-approval to then closing on a house? Or I guess let's just say they found a house, they put an offer on, it was accepted. What does that time length look like to close on a house?
If you're going through like with a mortgage, roughly 30 days is kind of
that's a realistic number.
Yeah, that's the normal. As long as, and that's if everything is done on a timely manner. If you're late on submitting documentation, then the lender has to take longer to approve it, which could delay it, things like that. But if everything is as it should be, you can be done within 30 days.
Okay. Mistakes. When the market was pretty crazy, you heard a lot of people, I think, waiving inspections, stuff like that. You guys have any horror stories about that? Is that, considering the market, is that a mistake, or is that a good tactic to move forward and get that house?
I think you should always get a home inspection.
Yeah.
I think getting it done quickly is a nice thing to do. Typically you'll see agents put 7 to 10 days sometimes for a home inspection period. Honestly, I always go shorter. I'm usually 3 to 5 business days. We've got a list of great inspectors that can get in there and get it done quickly. And keep in mind, if you do need more time, you can always ask for more time.
Okay.
So you're not stuck. That contract is something that can transform as the deal goes on.
Okay. So not set in stone.
Exactly.
Have you had any horror stories of somebody waiving inspection, buying a house, and then something happened and insurance claim wise, anything like that?
I've heard of things happening. One of the things that thankfully not with us, but one of the big things that people overlook all the time is the sewer.
Yeah.
Getting a sewer inspection, it's an extra $200 to $300, but it is so worth it, because I have heard of people's basements backing up shortly after they move in, and it's a common problem. And some of these like sewers just need to be scoped, and in certain neighborhoods that have a lot of beautiful trees, consider you probably have to have maintenance done to your lines probably once or twice a year, having them snaked out.
Yeah.
Just for regular maintenance.
That's a common, so it was like, seemed like, and every company's a little bit different, but I'm trying to remember who started it first, but that service lines coverage on homeowners policies is really important. And like the water backup coverage, it typically is an endorsement or like a rider that you add to the policy. So it doesn't just come automatically included. And I've seen people where DTE or consumers comes in and they got to dig up your front yard, and that's a $10,000 cost. And if you don't have that rider, which is like, I don't know, say $120 a year to add on to most homeowners policies, you saved $120, but you're around and spend 10 grand. But being aware of that, like Sinclair Shores, Grosse Pointe, we have a lot of, trees, and those trees over time, as they get bigger, grow into those lines, and they, destroy them. And it can create a major issue for a homeowner.
Yeah, I mean, it was definitely unfortunate to the person who bought my first house, because 6 months after we moved out, they had to get the whole entire sewer line redone from the house to the street. 6 months after we.
Yeah, that's crazy. I experienced sort of a horror story. A friend, they had bought a house, and it was during the wintertime in December, a new family. This is crazy. So little kids, first-time home buyers, really young, and maybe this is poor for the real estate agent, but they went to look at the house to do the final kind of walkthrough, and it was freezing in there, ice cold. The owner had shut the heat off. And so these guys, 23, 24 years old, not knowing any better, I don't think I would have known any better, turned the heat on. And then they left to go sign on their, close on the house. Went out to dinner, celebrated, went to grab a couple boxes and go see their house. Entire home flooded because all the pipes and all the plumbing had frozen. And then when they turned the heat on, it thawed and just water everywhere. When something like that happens, obviously the mistake to avoid would be, one, shutting off the heat in the wintertime, which is crazy to me. That's just like a super cheap move. But there was actually a small battle at the time between the insurance companies and who was going to actually cover that. Luckily, my client, our insurance company, did, and then just ended up going after the guy for it. But when you buy a house and you sign a contract and you close, is there anything in that contract that holds the seller liable for any negligence they do on their part at all? Or is it once it's signed that day, that person's relieved of everything?
Well, it's a lot harder to go back and fight what they want. And unfortunately, there are defects to the house that sometimes you can't see visibly walking
Sure.
through, but you may know by living there that, a certain pipe has an issue that's in the wall. And unfortunately, there are times that people don't disclose these things. So when you buy a house, you get disclosures for lead-based paint, and then also for condition of the property, how long the person's lived there, plumbing, electrical, appliances, anything that would be included in the house.
Yeah.
And you have to hope that they're truthful answering those. And hopefully your inspector will go back and make sure that to the best of their ability that they did a good job filling that out.
So if they're found that they did not disclose something, I mean, does somebody have the ability to go after them? Or
Absolutely.
They do? Okay.
You do have the ability to go back and sue them or go through arbitration. But it is a lengthy process, and it can be expensive. And sometimes you just have to weigh the pros and cons.
Brutal. Have you guys had anything?
Yeah.
Have you had anything like that, or
have we had to deal with anything like that?
Yeah.
I think that there have been times that our clients have found things in the house afterwards that really weren't disclosed. Thankfully, nothing's been catastrophic, but it's disappointing. And, for somebody, when you're buying a house, it should be exciting and joyous occasion. It can be a little bit of a buzzkill when you find out, gosh, you've got to come out of pocket for this repair, whether it be expensive or not. It's just sucks the fun out a little bit. But.
Yeah, no, absolutely. I mean, that was a terrible situation for those guys. It was Christmas time, like I said, young kids. It was horrible. I mean, it really was. So when the market gets crazy like that, and the demand for homes are so high, and there's not a lot of inventory, right? What kind of things can you do to put your client over the top and win that home?
I mean, cash is king.
Okay.
Obviously, having the highest offer is going to make it the most inviting to be accepted. But there's things even like a higher down payment. If there's a 5% down payment versus a 20% down payment, with the 20% down payment, it's more likely that the transaction could go through, that they're not going to have any issues with financing.
Okay.
Things like that. So there's a lot of little types of things that you can do. Even like, so if a house is listed at 300 and you're offering 310, you could offer like an appraisal guarantee as well. So if the house comes back and it's only worth 300 according to the appraisal, then you're paying that $10,000 out of pocket as well.
Okay.
So that way, you know, they're not gonna be like, oh, well, the lender says I can only do 300. So, you know, once again, now the transaction can't go through. So there's a lot of little things that you can add on to be equal with another offer, but makes yours more.
Now, when you're working with your real estate agent to figure out how to make a competitive, enticing offer, you probably have to run that through the lender as well, obviously, to make sure that they can afford that. I mean, how does that work?
Yeah, I mean, that's kind of part of the getting to know your client type of thing. If you know that your buyer can do a 20% down payment, maybe if it comes down to it, they might only do a 15% down payment, but do that appraisal guaranteed on top of it.
Okay.
And then if it comes down to it, you know, they don't need to do that, then they could do the 20%, you know, at the end.
Okay.
So just getting to know like what they can actually afford to be able to handle certain situations.
Yeah.
That goes a long way.
What does the market look like right now
In what way?
for buyers? If someone wants to buy a home right now.
It's the market really is balanced out a lot more to be a little bit more equal to a buyer and seller market. So there are still homes that sell right away when they hit the market that are exceptional homes. But what you're really seeing is now where homes were maybe only on the market for a couple days to a week, now it's kind of averaging 30 to 60 days on the market for a home. And I think that sellers are used to getting their number, so they're not as flexible with bringing their numbers down. But surprisingly, they're just waiting it out.
Yeah.
And they are getting what they're asking.
Okay.
So it hasn't turned into the buyer's market where you're able to go in and really lowball. But so it's just averaged out a lot more.
Is there more inventory, do you think? Because
there's about 9% more inventory this year than there was over last year.
Okay.
Home sales are up 7% this year.
So they're going up still.
Year.
Okay.
So they're still going up. There's a little bit more inventory than there was last year. So that's what I think's really.
Okay. Where do you think the market's headed in the next, let's say, just 6 to 12 months, and then the next, 3 to 5 years? What do you think that looks like?
Well, there's talk of, the Fed lowering interest rates. So whenever that happens, prices go up because now they can afford a higher priced house.
Mm-hmm.
Prices tend to go up when interest rates go down, which is what we really saw at, the peak of when they were like 2.5%. But now people got used to those prices. So even though the rates have gone up, the prices really haven't gone down as you would imagine. But so definitely in the short term, like 6 to 12 months, I'd say the prices are going to go up a tiny bit, or maybe even just level off to where the they're not sitting on the market for as long.
Yeah.
It could go back to that, week to 2 weeks before the house is sold instead of the 30 to 60.
Okay.
And long term, I mean, who knows?
What do you think? Were you going to say something?
Well, I was going to say, I think that with the interest rates going down a little bit, make it a little bit more enticing for people that, refinance their homes and got 3% or sub 3% loans, because at the end of the day, they don't want to move. They have to move off of that. And quite frankly, some people that bought houses at that interest rate, if you look at a 3% compared to a 6%, you're paying twice as much money for that house. So they can't necessarily afford to move either.
Right.
So anything that kind of helps people maybe make that transition if they need to will help the market for sure.
So in the simplest terms, for someone that doesn't understand the relationship between like the Fed and interest rates and how that works, so what does that mean when the Fed reduces their rates? How does that impact the house buying process?
Yeah. So it brings all the rates down. So you'll see like there'll be like a Fed rate, but then also keep in mind that whatever that rate is that you hear, that's not necessarily your APR, your annual adjusted percentage rate on there, where you have other fees built in. So your mortgage company will have fees that they charge and everything else. So let's say it's a 4.5% rate out there. You still might be paying 5.5 or 5.6%. for
Okay.
your mortgage.
Because the added fees and
Because
the
added
mortgage
fees
company.
and everything.
Okay.
Yep.
Right on. All right.
Also, your bank wants to make money. So,
You mean we're not in business to make money? Or
so the Fed's offering 4.5% interest rate. So the bank is lending you money, but they're borrowing it from the Fed. So they're kind of getting a return on it as well. So there's kind of like that, like it's almost like a markup. As you will, you go to the grocery store, you're not paying the wholesale price.
Sure.
You're paying the markup of what they paid.
Yep.
So the bank does it too with the interest rate.
When somebody sits down, they get an offer on the house, or an offer is accepted, and they're going through all the numbers to close and clear and all that, and they're going through their mortgage payment. What number do you think jumps out at them the most, or scares them the most, or confuses them the most? Of holy, what is this? Why is this here? Why is this so expensive?
I would say closing costs, because there's a lot of fees and different things that you might not really anticipate. And it's also a lot.
Yeah.
It could be like $12,000 for your first time house. That's a lot of money.
Yeah.
So I feel like that's kind of the most like surprising number.
Okay.
People shouldn't be scared by that number too much, because we can negotiate some of those fees getting paid for you by the seller sometimes. One of the things I think can be a shocker is the property taxes.
Mm-hmm.
So it's important for people to understand that the property tax rate that they see, or that the current seller is paying, is not what you're going to pay.
Okay.
So it caps from when that person bought the house. It can only go up so much each year.
Yep.
But when you buy the house, it becomes uncapped, and the taxes get reassessed.
Right.
So sometimes you're looking at a house that may be valued at $200,000, and they're paying $5,000 a year in taxes. Well, you just bought the house for $400,000. Now your taxes are $10,000.
Yeah.
So it's important, and if you have a good lender, they should be watching that as
right.
well.
We've just talked this in a prior podcast as well about how that hits first-time home buyers hard. They're not aware of it, and your real estate agent and your lender should always make sure that you're aware that after that first year, because we get the phone call, "Why'd you guys raise my home insurance?" I said, "No, sir, I did not. That was your taxes."
Now it's in big, bold writing on the purchase agreement that you understand that your property taxes will become reassessed once you close on this house in the initial.
Okay.
So,
that's go that's really good. Let's go back to some of the fees that people may see and people may not be aware of. So let's talk two of them in particular. One, there was a lawsuit within the past couple of years that had something to do with fees that real estate agents would pay. Can you guys explain that a little bit, so that someone that doesn't understand that, how that came about, basically, and then is there, like, how does it affect a buyer or a seller, and how does what's going on with that?
Yeah, so I wouldn't exactly call it a fee necessarily, because it was
a commission. A commission.
Yeah.
My bad.
Yeah,
Not a fee.
No
Commission.
I mean, some people might think of it as
a fee, sure.
Yeah, it had to do with the commissions, and then there was just a lot of bad dealing, so to speak, and collusion involved in not the entire industry. It was kind of in some markets that they did this. I actually read a report on it, and it was like one neighborhood wouldn't even let an agent sell or buy a house unless they did a certain commission rate.
Okay.
So it was, not allowing, fair competition. So then things like that came in and then just exploded, snowballed into where this whole lawsuit came in to kind of hopefully make sure that none of that happens again.
Okay. So is that off of the commission for the buyer or the seller, or both, or?
It would be both.
Okay.
So the commissions that you're paying to your realtor on the sell side or the buy side are always negotiable.
Okay.
So that's one thing when you're shopping and interviewing your realtor. You're talking about
fees,
your commissions.
Your commissions. My bad. Sorry.
That's kind of, one of the things that you can talk about. So on the sell side, like when you're selling your house, the way that it used to be before was pretty much always the seller would pay, a certain number to their agent, and then also would all pay for the commission on the buyer side.
Okay.
So, and it was advertised as well. So we could see when we're looking at a property, and this is kind of where one of the reasons for the lawsuit came out was I could see that if my buyer wants to buy this house, I'm going to make less money because they're not offering me a high commission.
Okay.
So that was kind of one of the reasons. So now we can't see if they are offering a commission or anything like that.
Understood. Okay. Is that a good thing or a bad thing?
It's a good thing. I mean, everything's negotiable, right?
Yeah.
So
Transparency.
there's a transparency. So in most cases, you're seeing the seller still paying the buyer's agent commission. But again, everything's negotiable. So I think it's all part of structuring the deal.
Yeah.
The difference now, though, is you are with your buyer agency, you are signing a contract, and this could be scary to a new buyer too, that they have to pay you this 3% commission or 2.5% or 3.5%, whatever you decide on. There's no such thing as a set commission.
Okay.
But that they could be on the hook for that, and they could. But if your realtor most likely is going to be able to hopefully negotiate some of that commission so that the seller will pay it. And then at that point, the seller could say, look, let's just pretend that we agreed on 3% commission. The seller could say, look, I'm willing to pay 2% commission. At that point, you're getting paid 2% maybe from the seller, and then you can still collect the 1% from your client, or you could waive that to make a deal. And I'll tell you, sometimes realtors, they're not all greedy.
Sure.
It's commission based, but I'll tell you, there's a lot of great realtors that when you're working on a deal, both sides, you'll see sometimes even give up to help move the needle, whether it be getting the price making sense for the buyer or the seller. So we'll sometimes make concessions so that we get the deal across.
Yeah.
That's the most important thing, is getting, because it really helps out both sides of the deal.
Yeah. So that leads me to another thing, but we'll stay on the fee part of it, commission part of it. Another thing that I think that would probably maybe people would understand is PMI. What is PMI and how does that affect a loan, and how do you get away from that?
So that's your mortgage insurance.
Okay.
So if you do less than a 20% down payment, you'll get that PMI.
Okay.
And that's basically kind of like insurance for your lender.
Okay.
Kind of the easiest way to say it, because they own your house until you pay it off.
Yep.
So if you default on your loan and go into foreclosure, they don't want to own a house. They're not in the business of owning houses. They want to sell that house, and they tend to not sell it at, market rate because they want it off their books quickly.
Okay.
So that mortgage insurance will cover the difference between what they sell it for and what you owe. So that way they're not losing money. And then you're not also losing money because you still owe that difference.
Yeah.
So it helps you and it helps the lender. But to get rid of it, you can do two things, depending on the type of loan you have, because conventional loan is the easiest. FHA, it never goes away until you hit that 20% mark.
Okay.
But you can either pay down your loan, so that way now it's at a 20%, you've paid 20% of the value of the house off to the loan. Okay. Or you can have your house appraised. Okay. And if, just for easy example, if you bought a house that, for $100,000, but your down payment was 10%, so you put down $10,000, so now you're at $90,000. But if you had your house appraised and now it comes back at $130,000, you're above that marker to where your house is
with that equity
20%. Yeah, you have enough equity to where it's above that 20%. So now you can get your PMI waived.
So you would now, do you have to go and get refinanced to do that, or you just ask for the PMI to be waived because of that appraisal?
Yep, you just ask for the PMI to be waived, and that's it. But you do have to pay for the appraisal. So it's kind of a little bit of a gamble because your PMI is usually like 100, 120, something like that a month. Mm-hmm. And your appraisal is going to be like $400 to $500. Okay. So do you want to pay for 3 months worth of PMI?
You gotta be pretty certain that your house is.
One of the things you can do, you can call us. And we'll run CMA, market analysis on your house, and give you a pretty good guesstimate on where your house value is currently in the market. And it's essentially what you're getting with an appraisal is a broker price opinion.
Okay.
So,
Got it. Awesome. Good stuff. What would you say, new builds? How many new home buyers are buying brand new homes that are building houses? And is that because obviously you then would assist them in procuring land, right? At that point then, or how does that work if someone's trying to build a house?
it really depends on if they're buying in a development or if they're building, they find a piece of land and they're doing everything from scratch. So with that, I think, you need to have an experienced lender for that as well. I wouldn't just call anybody because a construction loan, there's more to it.
Okay.
With different draws and different periods of time. So you have a loan, you're able to acquire your land, or maybe you're buying it with cash. But then your house that you're financing, you're really borrowing something that's not even there yet.
Right.
So you're taking construction loans out as you go. But when you buy in, say, a subdivision where you're building a house for you, but you're really going through a developer, at that point, it's a little easier to finance because you're financing the end product.
Okay.
So you're not, buying lumber as it's coming in, you're buying the deal at the end. But that's kind of fun because you're actually going through picking out all the materials and everything. So that can be a great experience. You don't see a lot of first-time home buyers getting into new construction. Quite honestly, I think sometimes it's good to buy a house and live in it and see what works for you and what doesn't.
That makes sense.
So,
yeah, because you never experienced that before.
It's also a lot more cash up front.
Okay.
When you're doing a new build, because you're kind of, like you said, you're lending against something that doesn't exist. So they want a higher down payment. So like right now, there's programs where you can do a 3.5% down payment. You can't do that on a new build.
Yeah.
You got to do maybe even like 40% down, to make sure that it makes it financially sound for the lender.
Yeah. Okay. Nice. Very good. This is a silly question, but when is the best time to buy and when's the best time to sell?
Today. Yeah, I mean, other than today, there is no set time. It's whatever is best for you.
Yeah. I like that.
Because if you're not comfortable with it, then you're not comfortable with it. If you think that you need to save up more money because you're not going to be able to sleep at night because you're worried if you can't pay your bill, probably not a good time to buy. But if, you got your ducks in a row, you're good to go, buy now.
Yeah.
Then start building some equity.
There you go.
It used to be everybody would say, you sell in the spring because that's when everybody's going to make the transition for schools and everything. And I don't necessarily see that. I think it stays pretty busy consistently year round. And quite honestly, I'd say the last 4 years, my October through December have been like my busiest months.
Okay.
So it's really not a bad time to sell or buy.
Yeah.
Basically, whatever's best for you. And, life happens. Right.
There you go. Yeah. There you go. Yeah. There you go.
So yeah, life happens. So you adjust accordingly.
Yeah. What do you say are like hot areas right now? Like where are people looking to move right now? What's your overall sense of feel?
So I would say, first time home buyers, I always see them kind of going towards, I call it the typical Warren ranch. It's your 3-bedroom, like 1.5 bath ranch. It's like 1,000 to 1,500 square feet. And there's a lot of inventory for those usually, but it's a great starter home. They're solid. They've been around for, a long time. So I feel like places like that offer that style house are definitely like great for first time home buyers.
So not sexy, but solid.
Yeah.
Yeah. Because you buy a new build. I looked at a house and it was a new build. And within 6 months, they had to have the entire foundation replaced.
Oh.
They had to have all of this like redone.
Yeah.
Because after the house was built, the ground just washed away.
Yeah.
Whereas these houses that have been here since the 70s,
settling
50s,
and all that,
they're there.
Yeah.
They're not going anywhere.
No.
Or, like houses in Grosse Pointe, a little pricier for a new like first time home buyer.
Sure.
But they've been there since 1920. They're not going anywhere.
They're sound. Yeah. Going back to the fee thing, because I did forget, and I ended up thinking of it again. What's your advice when people go, for HOAs, right? So you buy a house or a condo, they're in an HOA. Is there any advice of giving the clients about like the bylaws and how HOAs work? And do you get the sense that people feel like they avoid HOAs more, or?
So that comes down to knowing your buyer, because everybody's different. Some people, the origination of the HOA was essentially to protect your investment, to make sure that your neighbor doesn't paint their house pink, which now brings down your home.
Sure.
They've definitely progressed and gotten, a little loopy in some ways.
Okay.
But as far as an HOA goes, we can pull their bylaws and get like all their requirements and everything like that. So that way the buyer can look through it before they even put an offer in to know, like, is this something that we'd actually want to be involved in? Because, they might have an RV and that HOA might not allow an RV anywhere on the property ever.
Yeah.
So, that's throw that house out of, they can't go there.
Yep.
So
I've got a cousin.
Certain types of animals too.
Okay. Yeah, sure. Yeah. I have a cousin that lives in an HOA, and her husband's a plumber, and they're not allowed to have like commercial. He doesn't have some big, huge, gaudy truck. It's just a plumber, big F-250, something like that, and it's got advertising on it, and he's not allowed to park it in that HOA in that place, and that's frustrating for them.
Yeah, legally they have to give you the bylaws ahead of time, and I would definitely read them.
Yeah, which can be like pretty lured up language. So sometimes it's difficult, to go through that. It can be kind of confusing.
A lawyer to read, the bylaws.
Yeah,
but I think if you take your time with them, you can make sense of them. And if you have questions on certain things, highlight them. Ask your realtor. Maybe they can give you some insight. They're obviously not an attorney, can't give you legal advice.
Sure, yeah.
But I think you can get the nuts and bolts of it. And then if you have more questions, definitely.
Yeah. The bylaws are important, especially on the insurance side. When we find out that a client's trying to buy a condo or purchase a house in an HOA, we always tell them immediately, like, get us the bylaws as soon as you can to figure out. You'd be surprised. And, they used to say the condo association doesn't pay for anything inside. And we've seen a lot of bylaws now becoming more common where will pay to install everything originally, built inside that place. Any difference or any upgrades that you've made, to that unit, then your insurance would pay the difference for us. So I've seen where we've got to really just stack coverage on a policy because they don't want any part of anything. And then we've seen somewhere it's like, wow, they're going to, it's a 2018 built condo. They're going to put everything in there. It was originally installed. There was already granite in their countertop, stuff like that. It's like, well, unless you start going crazy, you don't have to add so much coverage on the policy. So same thing. We always say, if you're shopping, get us the bylaws. Let us review it with you so that we can determine what's the actual proper amount of coverage on a policy.
And then with the HOA too, that also goes into your payment. So now, like your debt to income that you're trying to wiggle with.
Good point.
One house could have an HOA of $100 a month. The next house could have a $600 a month HOA payment. So now you might not be able to afford that house anymore.
Right. No, that's a really good point. That's another hidden kind of fee, or not hidden, I should say, but a fee that you wouldn't normally think that would play into buying a house.
Question for you.
Yeah.
Ken.
Yeah.
It's, for pricing out a home insurance, what's useful information that the realtor can send to you? Do you like us to send you the listing ticket, the disclosures, pictures that are of the listing? Does that help?
Yeah, absolutely. All information helps, right? For most of the time, bro's just doing a wheelie on a motor. For real? That's crazy. So a lot of times when you get a home insurance, things are changing a little bit with AI and technology and the satellites, overhead pictures, stuff like that. But for the most part, a lot of insurance companies will send out a third party to do an inspection on a house. And it's not like an inspection buying a house. It's an exterior inspection only. They're basically there to just verify the square footage. There's no holes in the roof. The house is in good condition, not garbage laying everywhere, that sort of thing. And because if you don't have the right information, the description of the house, when that inspection comes back, that home insurance rate could go up or down based off of what the findings are. And we don't obviously like going back to the drawing board and figuring that kind of stuff out. We like to give one price and stick with that one price. So a lot of times we'll pull the information off the BSNA, like the tax assessor site, so that we can get the exact square footage, all that kind of stuff. But having, if an inspection was done or appraisal was done, to have that information come in. A lot of times people don't pull permits, right? They do things on their house, they don't pull permits. So getting an accurate idea of how old that roof is, because the age of the roof can make a huge difference on what that home insurance rate is. It's typically the most expensive thing that you would fix on a house, right? So getting that kind of information, just making sure that we're describing the home accurately, so that at the end of the day, that dwelling number that comes out that we're insuring a house for remains that way and the price stays that way.
So what are the best things that a client can do once they buy the house to keep their insurance rates where they are, or even maybe bring them down? Like, what are the best?
Yeah. So like we get a lot of people that ask about like alarms. Like everyone has like a Ring doorbell's kind of like they consider an alarm nowadays. So most companies don't offer substantial discounts in their home policies for having alarms anymore. Centrally monitored ones help a little bit, but it's not like it used to be. The roof discount is the big one. You get a brand new roof, you submit that invoice showing that roof was done. It's a substantial discount. Some companies, new heating, electrical, stuff like that can help. But the best thing you can do to keep your rates stable are to make your payments on time, because it has a lot to do with your insurance score, and your insurance score has a lot to do with your price for your home and your auto insurance. Some people don't like that. Credit is a predictor for people paying their bills on time and filing claims. So I get it. But sometimes it does seem kind of, unfair. But paying your bills on time, and then not shopping your insurance constantly either. So your longevity with your carrier, helps as well. If you're a guy that bounces around all the time, that's going to affect your insurance score, because that company doesn't think they're going to hold your business for very long. So things like that. And then just, maintaining your home and not filing claims, right? Some people think that insurance is just there to fix all the things that break in their house. And that's not how insurance works. Like, your job is to maintain your home. We had a client that had a tree fall in their house. Tree didn't do any damage to the house, gutters, nothing. And he wanted to file a claim for them to remove the tree. And I'm like, well, the tree didn't break your house. So there's nothing to claim there, right? So our job is not to maintain your home. Our job is to bring you back, after a sudden and an accidental loss. So people have to remember that too. And another question we get all the time, and I'm curious if you guys hear this as well, is people will call us and they say, you've got my home insured for X amount of dollars. It's worth way more than that, or it's worth less than that. And it's like, well, the thing is that we're not insuring your home based on market value, because if the market tanks and they're going to say that your house is only worth $75,000, I can promise you it doesn't cost $75,000 to build your house. It's going to be way more than that. So it's like replacement costs. We're insuring your home for replacement costs. And typically we look at price per square foot to determine if we're at a fair number or not, if that seems high. And sometimes that can get out of whack if you've been with the same carrier for a long time, because they have like these inflation guards built into it. So every year your home insurance might go up a little bit, $10, $20, $30. But if you look at your coverage year over year, you'll see that your actual coverage in your home policy is increasing. So it may be $300,000 right now. Next year, maybe it's $303,000. Next year after that, maybe $340,000. You know what I mean? So, but sometimes that can get out of whack, and you have to go back to your agent and have them rewrite your policy, or you just unfortunately have to shop it, to get it back down. So those are basically the best ways to, keep level premiums. If you, more money you have, more cash you have, the more likelihood you can afford to fix something out of pocket, right? So, and then just maintaining your house, having your lines snagged on a regular basis, right? Changing those filters, doing all those things to prevent claims from happening, and then jacking up your insurance. And then just having, I don't care if you have the best insurance agent, the best claims adjuster, the best construction company, all those things, claims suck. They're still a pain in the ass, especially if you have to move out, for a short period of time. Stay in a hotel, just go through all that. It's no fun. It's no fun. So, but that's a good question. Great question. 2 minutes. Okay. That's pretty much it. I mean, I can ask, if you guys have other questions for me, not necessarily anything you're curious about.